We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back to the Capital Mindset Show. So today's going to be an impromptu kind of video because we were talking in the Discord server about this very question, and I thought, you know what, heck, let's do it live. So we're doing it live as per the intro that you saw there. So the question or the topic at hand is Activision Blizzard. Okay, and I see Tyson is actually saying, well, I didn't even prepare for this. Look at this. I don't even have the doc set up or anything like that. So give me just 1 second as I set this up so I can bring up your comments and stuff. Because I literally was like, oh, okay, I'm just going to use my break today and do this live. All right, so let me go here. Let me connect you guys up here. And then, boom. The beauty of technology. All right, the beauty of technology. Click retry. There we go. Okay, and then I have to enable chat here. Testing with this guy. All right, cool. And I'm not going to be doing stuff on stimulus checks in Spanish. That would be funny, though. Okay, so the question, let me pull up actually on here. I'm going to have the Discord chat here on the right-hand side. And basically, the question is, when do we buy the shares of Activision, right? Because let's hypothetically say, okay, we think it's going to go through, and we think it's going to go through at, I think, let's say July. Okay, July is when we're going to receive the decision. Let's just use that date arbitrarily, okay? Because I think that's the supposed acquisition date, but not the date of the decision. And we're going to see price movement on the date of the decision in either direction. So let me actually make sure I have, let me put you guys here in the corner. Okay. All right. Greetings, fellow janitor. Janitors unite. Greetings, fellow janitors. All right. So what we're going to be doing, and again, if you probably might or might not have seen my newest video, but those videos, I guess, those are for you guys, the OGs. Okay. So anyways, it's not about the deal going through. It's the question today is about, let's hypothetically say the deal we think it's going to go through. All right. So then the question then becomes, when do we get involved? So I already am involved, but my price point is a little bit different. And so right now if we think it's going to close in July, we're not caring about the tax implications at this point, because you could make the argument that buying it before a year goes out, you would get preferential tax treatment depending on what kind of capital you're going to be putting down and what is the potential gain that you're going to realize from that sale. Okay, so now taxes shouldn't really be a question. Right now, it's all going to be under the 1 year. So irrespective of anything, we're going to have that problem. All right, so let's see here. So the deal going through. So we're going to keep it as if it is going to go through. Oh yeah. That's also my name, by the way. Yeah. All right. So anyways, kind of continuing from this, let's go. I've talked about this concept in the past, and it's kind of more so looking at absolute returns versus annualized return. Okay. So what I'm going to be doing is I already have a position in it, but if I was looking to add more, what I'm going to be basically doing, there's no harm in waiting for me. So I'm going to, let me actually share and we can walk through this. So this is just an open Google sheet that we're just going to go through and do some calculations. But if we're looking at it from a close or decision, let's say the decision is in July. Okay. So July and let's say it's July 1st. Okay, so we have 6 months because we have from January all the way through June, and then July 1st it closes. Let's just use that as an example. All right, so if I were to buy today, we're in the middle of August, so I'm going to make it easier for us and say, the full August, the full month of August. So we have August, September, October, November, December, the remaining 5 months of the year. And then we have an additional 6 months. So we have about 11 months. We just missed the opportunity to have long-term capital gains there. All right. So if we're going at it from that perspective, we have, again, 11 months. And let's say we buy it today. So right now, the acquisition price is $95. And we can purchase it for $80 today. So let's pretty simple math here. So this is today price or price today. And then this is MSFT price. Okay, so this is their buy price. I'll say buy price. Wow, My hands are full like of energy because of all the coffee I've been drinking. It's nuts. They're actually like shaking. All right. Anyways, oh no, TTCF is acquiring Activision in an all-stock deal. Yeah. TTCF is acquiring Microsoft, who is acquiring Activision. Yeah, McBoot is actually right. That's actually what the deal is going to be. Okay, so if we're going at it from this perspective, right, what is our total gain? What is our absolute gain right now? Okay, so that's pretty simple. We'll just do an equation. We'll do new minus old over old. All right, so, sorry. So we have that price minus this price, and then we divide, of course, by today's price. This is our implied gain of today. Let's put that as a percentage. And this is our absolute gain, all right? So this is right now what we would acquire. Now, the problem is we want to annualize this. So this is actually what we would gain, absolutely. But let's annualize this for an example. So this is our gain, and then annualized. All right, so what I'm going to do is take this percentage and multiply it by the 11 and divide by 12. All right, so that would be, for example, well, that's not the annualized gain, sorry. It'd be the other way around. So that's our annualized gain. Okay, so basically this is our implied gain because we're removing 1 month from the equation. All right, so now let's assume that, for example, we fast forward in time, we waited, we were pretty patient, and it's going to be rather tamed. The price of Activision Blizzard is going to be rather tamed. So this is actually the question that we were kind of getting to within the Discord server itself. So it's like, okay, let's say we fast forward to January. You hold off on it, all right? So you hold off on it, and now you're in January. Okay, so then what is your implied gain at that point? Okay, so you have still your same gain. Let's say the stock price stays at $80, and now you're sitting at an annualized gain of, well, we're going to calculate it using the 6 months because we're going to go from January all the way to July. So you get the point. I've done calculations like this in the past. It doesn't change your realized gain, but it's actually something that you can use as a comparison. So your opportunity costs, because you're only going to be holding the position for 6 months at that point. In theory, like you have to be already confident. We're assuming you're really confident the deal is going to go through. And so that question's gone, right? You're no longer questioning that. You're basically just saying, okay, well, how much capital am I going to be putting in? And what are my other options at the present moment in time? So remember, at the end of that 6 months, assuming your thesis is true, we're not going into whether or not it will or will not happen. We're going to change it up a bit. All right, so let's see here. Fabio, don't you got to work, buddy? No, this is my break right now, JP. So it's not going to be a full live. It's just going to be like a quick break here. So, but yes, thank you for the concern. I'm actually like cracked up on coffee right now, so I have a lot of energy. Oh, wait, I have to enable the chat. So my hour break that I'm taking today or so, I'm going to be doing this live stream with you guys. Yeah. I think this is his lunch. Yeah, this is my lunch. This is my lunch basically right now. So that's what we're doing here today. All right, so again, let's go to that January example. So we have let's say the price is still the same around January. We have 6 months, assuming we're just making up the dates here because I don't know when regulators are going to see the case and approve or disapprove of the case. I think the acquisition close date is supposed to be in July from what I was reading from you guys, but it might, the regulator's decision might be before that. Maybe it delays it and they have to, postpone the acquisition a little bit. But yeah, and then so if we were to do that again, we just change up our equation and that would be like your annualized rate of return. So you can see how it's very promising at that point because you're still getting that $15 over a shorter time duration. You annualize that rate of return and you're pretty set on that. All right. So yeah, that's pretty much all you can do to calculate it, right? So you use this as a comparative measure, as something to look at. Okay, well, what are my other options out there? It's not actually what you're going to realize. You're still going to only realize the 18.75% rate of return, but think about it from the time that you're actually putting the capital to work. So then the final conclusion of all this is, okay, so if I buy it today, my annualized rate of return was X, all right? Is that worth it to you? What are your other options? And this is, again, you got to consider the risks as well, because we're assuming in a scenario where you're not really caring about that and you're just looking at it that it will go through. You somehow know 100% it's going to go through. let's see here. 4 periods of 3 months. Hold on, capital mindset, you actually calculate it incorrectly. For example, if you calculate it with 3 months, it would be 1.187 times 1.17 times 1.87 because there are 4. You're compounding it. What? Why are you multiplying it by an 18% growth every single month? Oh, I guess you're joking. Okay, I guess you're joking. Similarly, if you did it over 6 months, it would be 1. You're compounding it because there are 2 periods for 6 months and 1 year. My brain might be dead, but I'm looking at this and I'm thinking you're compounding it. I've been up since like about 8 in the morning. Could you take a look at Williams-Sonoma in this live? Yeah, I can take a look at Williams-Sonoma, the Becky index. We've looked at the Becky index in the past, so let me actually pull that up. But yeah, that's the major point I wanted to get across. You got to annualize your rate of return. I could have gotten the calculation wrong, absolutely. If I did, funny. I'll keep it up here. But the message still stands. I don't think I did, but I think you're compound, or I think you're joking here, but pretty sure you're just compounding the 18%. Yeah. Yeah, because you wouldn't be compounding it on a monthly basis. I mean, that would be absolutely insane. Your end return would be like, you're not assuming you're getting 18% per month, right? Because you're doing it over 6 periods. But anyways, Williams-Sonoma. So Williams-Sonoma, part of the Becky index, they're kind of getting hurt right now, it seems, today. But yeah, so let's see this one. But more recently, I mean, they did a nice pop, I know. And here we go. So let's see. It went up to about 40. Wow. 46%. I remember I was watching you guys post picture of this in the Discord chat. It looks cheap, just like on the surface. 10 PE ratio, dividend yield of 1.92%. So, yeah. Well, okay, you're compounding it every 6 months. Oh, but when you can't compound in this case. I don't think you can compound that. I'm pretty sure you can't compound because it's like an interest rate, right? Like an interest rate that you would receive on like a bond. You're annualizing versus not annualizing. You don't necessarily compound that interest because you know what you're going to get. You are going to get 18.75% in total gain. I don't think you can necessarily compound it, but yeah, maybe we're just speaking about semantics. Maybe, absolutely. No, but like I could be wrong because again, like my brain's kind of like, I'm a little bit drugged up on coffee. So I have energy, but like in terms of like brain power, I've been studying regulation all day. All right, so my brain's kind of, which by the way, I gotta say, if you guys weren't asking about this, but I'll tell you anyways. So FAR is way more material, but reg is way less material. It's just little nitty bitty rules that the government has that you just have to memorize. So many different ranges. There's a lot of ranges in which you start doing these weird, interesting calculations that I'm trying to memorize. Okay, you guys are looking at it from, okay, I know what you guys are doing. You're basically looking at it from a theoretical where you can compound it again 18% in that month. But that's, okay, that's an ask there, okay? I know what you guys are saying there. All right, that makes a little bit more sense what you guys are saying. But I wouldn't really make that assumption. I mean, that you're going to do it again 18% in the next 6 months. Yeah, because then, I mean, come on, guys. What are you? Capital Mindset, you look at WBA, you have sacked their CEO, Steve Bruce, today. Oh, wow, they did that? Because we were talking about that last month, that it looks like they might be doing that. Or I think it was you who mentioned it, Nash. I think it was you, right? So, okay, they sacked him. All right, but anyways, looking at Williams-Sonoma, my preliminary thoughts here is that if furniture does recover, they should do well. But I don't know much really about this. Yeah, they just look cheap on the surface. I know they're part of the Becky index, et cetera, and that's all well and good. Okay, so I know you're looking at it as if you're compounding it. I wouldn't necessarily compound it, all right? Because I would like to look at it, for example, as a point of interest rate, like an interest rate on a bond, because we know what we're going to get. Right? We know we're only going to get that fixed amount of dollars. Fabio's being trolled right now. I might be being trolled. If I'm being trolled right now, I have no idea. Like my brain's not capable right now of understanding a troll. All right. So, anyways, let's look at oh my gosh, you see, like my brain just shut down. What is the ticker I'm typing in? WBA. Walgreens Boots Alliance. Wow. Okay, so they're down back to $38. This is basically at the price point which I originally owned Walgreens back in the day. So it's back at that price. It's insane. So it looks so much cheaper compared to its twin brother CVS. All right, so we talk about CVS. So CVS now ends up like their insurance division is probably what's propping them up in this. So they've gone through two alternating strategies. Walgreens Boots Alliance did more of a partnership route. CVS did more of I'm going to buy you and integrate you route. So yeah, West Brom. It's like how drip works. I'm seriously. Oh, okay, Catherine. Like I was like, all right, no. I was willing to believe that my math was wrong, because I was like, yeah, my math might be wrong. But the point was, in the spirit of the argument, was supposed to be correct, right? We have to annualize the rate of return. However, so the math is right. Because I was like, wow, okay, I can't do basic math now. All right. Anyways, so if you had a drip, you would get. Oh, you're talking about dripping and stuff. All right, Markel stocks looks juicy today. So let's look at Markel, because Markel's one that I want to buy probably more of. This one I have been putting in my sister's portfolio in her custodial account, because it's one that, she's not going to be touching the money for any time soon. So, and honestly, if I open up an account for my non-existent children, maybe I'd be putting this in there for them too. Fabio, can you talk about ATVI? Oh, okay. So yeah, we can talk about that. Before, in the beginning of this video or this live stream, I didn't want to address that. It was basically more in the theoretical sense. So do I think it's going to go through? I do think actually it will go through. I think that Microsoft they're not acquiring technically the largest player. So technically, if you look at it, Sony and Nintendo are also very large players. Activision is a very large player. If we also look at how some politicians have been playing it, it does seem like they're buying into this, like as if it is going to go through. So just based on that, it's a different situation from something like Aerojet Rocketdyne, where Aerojet Rocketdyne was actually going to be acquired by Lockheed Martin, but they control about 70% of the rockets market in the West. So. Yeah, that was a stretch, but it could have gone through, but it was denied at the end. And it looks like Elliott Asset Management might be very interested in acquiring the full company. It's within the size that they are actually interested in. Might talk about the new stock I bought. I did buy a new stock. All right. I don't know what it's going to be designated as when I do a portfolio update. It's either going to be a speculative or it might be a non-speculative. So I don't know which side I'm going to set it to appear on. But right now, I'm kind of on the fence of whether or not it's going to be in the speculative side. So that stock is Perion Networks. All right, so I'll talk a little bit about that. But anyways, Activision Blizzard, I do think it's going to go through personally. And I don't have just 100% crystal ball. What I'm going to be doing is exactly what I've been discussing in this video. So I have no incentive right now to buy it today, right now. I'm going to be waiting until next year. And then if I still at that point feel as confident as I do now, I might consider actually buying some more shares. I'll look at it from a perspective of what are my alternatives to invest in? Do I need that cash? Do I not need that cash? And then I'll look at it on a potential annualized return basis and then, go from there. And then you might actually see me build up the position a little bit more. And it's going to be irrespective of taxes at that point, because it's going to be, if I think it's going to go through, it's all going to be short term. It's all going to be in the short term. So, actually, yeah, no, you are, no, wait, you're still compounding it. I wouldn't be compounding it. Yeah, you can't be compounding it. So that, Katham, so like on a serious question, you can't compound this. This is not a compounding annualized rate of return. Because you're using it to the power of. So you're trying to figure out what's the compound annualized. You're looking at the compound monthly rate of return, right? And you calculate it at that. Oh, that's actually I think what I received. Mm-hmm. Okay, but back to other questions. Could you look at new considering the play, but it's overlooking something would get some insight? Okay, so ticker symbol 1. Let me type in this ticker. So it's O and W. One Water Marine. What is this? Okay, so but this is a micro cap. All right, micro cap. I see why you're considering it. Like, it looks cheap on the surface. Okay, so let's see what this even does. Is this a utility company? No. What is this? Inventory. Oh, okay, no. Do you build boats? I think they build boats. It looks like they build boats. Dealer brands, location maps. Yeah, so let's look at this. Oh, they own dealerships probably. They're like a publicly traded dealership. Yeah. Okay, so it's a publicly traded dealership, it looks like. I don't really like these businesses too much. I mean, like, there's other ones. Okay, so but they're in the marine. I think boating dealerships are one of the most interesting places. I'll be nice. Interesting places. All right. But yeah, have you found any other players that do the exact same thing as Perion does? I mean, doesn't APPS do the same thing? Apps Digital Turbine, I think, but not entirely the same thing. Like, they just compete in the same vicinity. So APPS is this other one. They're the United States one. They do something like with mobile, and like look how far this has fallen. ASOS is down. Okay, ASOS is down 10%. Wow, I'm getting overwhelmed with all this info right now. SQM starting to look interesting. What is this, you guys? All right, guys, lay it on me, because I have been not paying attention to the markets too much recently, so I've been too busy. I mean, why is this interesting now? Oh, Chilean chemical company. Yeah. Ryan Cohen, BBBY play. Okay, so I personally am not interested in this play whatsoever. I mean, this is like a short squeeze play. I think he actually just filed so that a permission so he can sell it off, right? Oh yeah, down 43.38%. Wow, this crash. He was really trying to get out, but I don't think he was able to get out. Wow, this is nuts. This is nuts. Foot Locker's up 20% today. My gosh, what is going on? All right, now I have egg on my face for selling out early, but no, I made a nice profit. I made a nice profit on this. This is one where we profited off of the sharp decline, but, you know, had I held, you know, heck, would have been better. Yeah, we are talking about different types of return. That's what I was saying, because like you're compounding like on monthly compounded basis. Yes. I was doing just like a quick annualized rate of return. New CEO at Foot Locker. Okay, so he's probably going to bring new life into the company. So what is my main concern for Perry? My main concern from Perry is that at the current stage that they're at, that the company or the CEO misallocates capital to a severe degree. Because if we're looking at Perry, and that would be honestly my main concern, right? Because I know that there's like a bear report or whatever on it, and there was something about to do with some websites that they own, but it's not really that big of a deal in terms of the overall size of the business. Now, they have this new technology that's supposedly going to help out with cookies, or the replacement of cookies that Google's actually transitioning out of. As far as their balance sheet goes, it looks like they're very healthy. They did dilute a bit, but that dilution was to raise capital. It wasn't really for stock-based compensation or anything like that. Now, as far as the premium or lack thereof, it's probably, I don't expect there to be a premium assigned to this company anytime soon, despite the growth, just because it is an Israeli company. I mean, a lot of these Israeli companies always look perpetually cheap for the most part, but yeah. That's one of my concerns. Yeah, Foot Locker is recovering. I know, it's nuts. It's nuts. Well, the problem with that is to make 11 months equal to 12 months. Unless you were tedious with math, you'd reduce it to a month and back to a year. Represent 11 months in years too. Yeah, you can. All right, so let's see some other stocks here. Yeah, I have a couple videos coming out on finishing up the consumer price staples. I think the games thing is interesting. I've been seeing how they've been putting up some interesting games there, but I haven't really been playing them. If they get into some actual AAA games that you can play and stream from there, that'd be pretty awesome. But for now, it seems like it's just like mobile games. Sold it today, 60% profit. Wow, when did you buy, McBuddha? That's nice. All right, so anyways, let me see here. CD Projekt Red, that's another video game stock that I know people have. That one owns the Witcher franchise, whatchamacallit, Cyberpunk, and, I think it's Polish. It's a Polish company, so let me look them up. CD Projekt Red. I think it's, well, this is the Polish one. Let's just look at the dollar ones. How they've been doing. Absolute garbage. All right, so that'd be an interesting look, to be honest. It'd be an interesting look. I know some of you have been buying Take-Two Interactive, and Electronic Arts looks like it's back to 130. Electronic Arts has been stuck, absolutely stuck in the past 5 years. You have basically made no money in Electronic Arts. Hot take, Witcher trash game? No, you take that back. That is completely not true. I mean, I haven't really played it, but I wouldn't call it a trash game. I think the game was pretty good. I haven't played it like a lot, but I played it, I think, a little bit. I think it's like for people who like open world games like that, focused on fantasy, it's a good game. Some people say, yeah, it's the best game ever. I know a lot of people who like The Witcher. Yeah, I think The Witcher game was very successful. I don't think we can say it was an unsuccessful game. But I think a lot of people are saying that Cyberpunk definitely was not a good game. Game of Thrones this weekend. Yeah, I'm not going to be watching Game of Thrones. I got disillusioned with Game of Thrones, to be honest, on the last season. I don't have time. I'd rather watch other things. EA is stuck because they refuse to make Madden better. I mean, well, do they keep buying Madden? I haven't seen their sales. I'm not really paying attention to these video game stocks too much. And made 2042 suck. Yeah, okay, Battlefield 2042. I didn't buy it. I mean, I only play some indie games, really. I only play Ready or Not right now. That's the game I'm playing. EA ran Battlefront into the ground as well. Yeah. Oh, Tori, I haven't seen you in a while in the live streams. Well, I haven't been doing EU-friendly live streams in a long time. Ryu. Yes, absolutely. Take-Two is underrated. I mean, why do you say that? Because of, I know they're coming out with, GTA 6. So, yeah, so they're coming out with GTA 6. GTA 6 is, when is it coming out? Let me actually look it up here. But GTA 6, I've been hearing some interesting parts. Okay, so yeah. Let's see here. Yeah, but there's been some criticism about it. GTA 5 is their moneymaker, yeah. I've been seeing some speculation that it's going to be a bit of a failure, though. Hello from Germany. Hey, how you doing, man? Still no Crocs in your portfolio? No, I haven't really been getting to it. I've been so busy, guys. I've literally been so busy. All right, so let me see this. Final value. Okay, so. Okay. Yeah. Yeah, I don't really know how it's going to do. All right, Fabio, can you do a Bubblesome portfolio review? I have done a Bubblesome portfolio review. It's back in the olden days. So it's already on the channel. I don't know if I would do it again. Dude, copper stocks and the like. Thoughts on aluminum and copper stocks? No comment right now on them. Because, I don't really know what copper prices and aluminum prices are going to do. So, Hot Take-Two interactive with GTA game is my metaverse play. I mean, maybe that's what they're going to get into. I'm looking at Rio Tinto and Vale. I mean, Rio Tinto is the one that didn't do anything in my portfolio. Yeah, it's still doing nothing. I mean, now it's just at a watcher position, but I have nothing against it. I would make it a position, an actual position, if I think there's potential. But I haven't had the time to really look at it. Vale, I wouldn't touch. I don't like Vale. Yeah, I don't like Vale. So, yeah. I personally wouldn't be touching Vale. So I'm looking at some other things that they have in the pipeline. Well, let's just go to their website. Take-Two Interactive. All right, so investors. Where did I put you guys? Here we go. Webcast, earnings presentation, investor presentation. Why not? Let's go here. All right, so Rockstar. I mean, Rockstar is basically making all their good games, man. Take-Two has Borderlands, I think. Zynga is their mobile division now that they bought. Developments to do staff headcount. All right, you're hiring more people. Who cares? Red Dead Redemption Online. What do you guys think about that one? Gonna end up buying Rio. I mean, Rio looks cheap, but yeah, it looks cheap. All right. Well, guys, I have to cut this stream short. One more comment basically on this. Yeah, by the way, so I'm trying to remember. I'm pretty sure, yeah, if you want to be more accurate on your analyzed rate of return, you would do the compounding base. Well, not the compounding basis. You would take it as exponent. I did a video on this in the past, actually, and I'm remembering. So I just did a quick and dirty one. But anyways, so that was basically the purpose of this live stream. I don't want to get carried away and look at too many things. I will do another live stream over the weekend. And so this is just to answer that question. So to summarize, yet again, the purpose of this live stream, if I was looking at Activision Blizzard and I solely believed that it was absolutely going to go through, at this point, taxes are not a question, are not a consideration. And if you're looking at it from an annualized basis rate of return, that's going to be a bit better to compare to your alternatives. All right. And then that's how I would consider it if we start approaching further. So, I don't think personally it's going to move too much. It's not going to move too much higher and too much lower until the decision. I think that delta between the acquisition price and today's price isn't going to move too much. Maybe a little bit down, maybe a little bit up. So for me, there's no harm in waiting. And then if we're looking at the same prices about next year, I'll look at what alternatives I have to invest in, and then I would consider buying more. All right, that was the sole purpose of this live stream. Yeah, so I'll answer a couple more questions. How about that? I'll answer a couple more questions. I see some people are just joining in now. Because I still have some time, but I want to get some food in me. I haven't had even breakfast yet, so to give you guys an idea. Quite literally, I'm just running on coffee and the sugar that was in the coffee, and that's about it. And then I need some food in me so then I can get back to memorizing more regulations, because regulations are fun. I actually kind of like regulations. All right, would you buy BlackBerry or Wish stock? BlackBerry over Wish. No. So you are on the Venezuelan diet. Yes, I'm on the Venezuelan diet. These are very insightful questions. Oh, you know what? I think I can talk a little bit about, before we head off, this is not what this stream was about. How about the new tax bill stuff, guys? What do you guys think about that? So I would say for the... I was looking at it and they're going to hire 86,000 staff members, but I think it's about 50,000 are going to retire over the next 5 or so years. So the net increase is basically nothing. And I'm thinking about it from the perspective of auditing. They're probably going to go after the middle class a bit more. All right. And that was already the trend. And nowhere in the bill does it say they're not going to go after people making under 400K. And the thing is, if you're not making as much, you don't have the resources to, get good tax planning strategies in place with your professional CPA. You got to pay up for that. And, the IRS is actually an interesting, it's an interesting relationship that you can have with the IRS. I'm speaking for Americans because most of the legal system in the United States, you're innocent until proven guilty, but except with taxes. The Supreme Court, I imagine, would never hear a case on this because they would completely remove a lot of the power the IRS has. So dealing with the IRS, if anyone has dealt with the IRS, I personally have not, and I'm still young, but maybe one day you get audited. It always depends on how much you're making that they might or be likely to audit you. But you do have to provide, and you have to keep a record of, I think it's like 7 years minimum. And so imagine that, like if you're a small business owner, you might not even keep records 7 years ago, which is nuts. So, it would be absolutely. I personally think the way it's going to play out, because they have a goal to raise about $200-something billion, and the IRS came out with a statement. I forget when they did this, but I remember reading into it because I'm a bit of a nerd like that. So I think it was a couple months ago. They basically said they don't have the staff or the experienced staff to go after larger corporations or companies. And you don't get much training with the IRS, from my understanding. You don't really get much training. So you're competing against people in the private sector who have a lot more training, a lot more experience. Makes it a bit problematic when you think about that. So I think they're pretty much gonna go after middle class. Capital Mindset, not sure if you touched on it yet, but did you see Foot Locker? Yeah, we did touch upon it. I mean, it's nuts. It's absolutely incredible. And so, but basically on the conclusion, I saw what the Wharton School of Business came out with. They basically said it's going to have no effect on anything that they're saying. It just has the name Inflation Reduction Act. And if anything, it's going to have some small negative GDP implications. I already talked to you guys about the redundancies of, also the negotiation for the medical stuff. At the beginning, I was like, oh, okay, like they say they're finally doing something like that, and I looked a little bit deeper, and it's not going to do much of anything. It's kind of silly. I think the whole thing is kind of a joke. But the parts about the corporate minimum tax was kind of funny because I don't know of many. It's like very few companies even fit that description of what they were trying to tackle. The book income versus the tax income, the only reason why there's a difference is because the government itself decides so. So they're doing it as a 15% minimum tax on book income. And for the accountants out there, you guys probably know, again, the difference between book income, tax income. There is a difference. There are two separate accounting standards. I know some of you were surprised to find that out. But yes, there is. And I think you investors are mostly experience the book income because that's GAAP accounting. And just basically the major differences are depreciation schedules and stuff like that. But companies don't really do any. Loophole is a weird word to use. It's not a loophole. Loophole implies something a bit more nefarious. If you talk to a lawyer, like that's, I've talked to a bunch of lawyers about that kind of stuff. They kind of, most of them have cringed at the term loophole because it's not technically a loophole. It's just the law. And so it's kind of weird that they basically are changing it. So they're saying instead of changing the tax law, we're just going to make it so that it applies to GAAP accounting. All that's going to do is, just change up how they, maybe the big four are doing their taxes or tax strategies. That's all it's really going to do. Maybe more business for them, so good for them. But yeah, it's not really going to do much of anything. A lot of redundancies in that part. And then same with the IRS. People are saying the 86,000. That's a buzzword or a talking point. It's not really much of anything. I'm kind of upset because I'd rather hold off now on the Tesla purchase till next year because I don't think it's going to come into effect, the tax credit, until next year. So I'm going to miss out on that. That's another part, but I'm cool with that. The people who buy an electric car next year are going to get that, whatever. Yeah, Joe Schneider, I think they'll go after Uber drivers and people who do side gigs. That's exactly who I think is going to be mostly affected by this. I think they're going to avoid going after CPAs or people who are experienced tax strategists. I think they're just going to go after people who they think they can probably eke out a decent amount from, because at the end of the day, like the training you probably get is sufficient enough for you to say, okay, show me the receipt for this, show me the receipt for that, show me the receipt for that. If you've ever seen, for example, like a corporation's taxes from it can vary in size, but it can be quite ridiculous to go through, and they're prepared by professionals. So the IRS they don't really want to go after that. And the trend actually was moving in the direction that they were going after more the middle class, people making under $70K a year is who they'd probably go after. So that's my guess. That's my guess. So I agree with what you're saying there. And land depreciation as another joke to the accountants out there. So, but I agree with Joe Schneider's comment here. I think like the most people who are gonna get attacked by this are definitely gonna be like Uber drivers, specifically Uber, Lyft drivers, people who are questionably reporting their taxes and don't have proper tax planning strategies in place. Yeah, they're gonna be affected. The people who are very wealthy, who have there might be a couple but it's going to be isolated cases, right? In that case, it's not going to be. I'm sure there are people who are wealthy who are just like outright evading taxes, and I think it's going to be more of a loss than a gain on the most part in aggregate if they just go after people who have very good tax planning strategies. Okay, that's just my opinion. Any thoughts on Latin America stocks, Meli, Nucor, or Nubank? Sorry, not Nucor, Nubank and STNE. I don't like them except for Meli of all of those. And STNE, I've talked about in the past my issues regarding their governance. I have a bit of a problem. I know that's the one that's owned by Berkshire Hathaway, but just because Berkshire Hathaway owns it doesn't mean I necessarily care for it. Yeah. Oh, sorry. So, yeah. Meli's one I have a past love with, and then Nubank is one that everyone loves in Brazil for some reason. I know that from the Brazilians that I speak to. So they love that bank. But yeah, land depreciation makes sense after the sun explodes in the supernova. Yeah, I mean, eventually maybe they'll let us do it. Tax accounting, book accounting both allow for depreciating land. Yes, of course. No, it does not. But let's see here. Wait for what has a middle class ever done for you? Yeah, true. All right, guys. On that note, I'll probably let you guys go here. And with that being said, I will see you guys on the next one. I'm gonna get back to it, get some food in my belly, and yeah, keep on going. But again, I'll finish off with the closing thoughts. Again, think about it from the annualized return perspective. I absolutely could have been more accurate. I just did like a quick and dirty way of calculating it. But yes, so the in spirit, look at the annualized rate of return, and then compare it to your oh my gosh, alternatives. Can't even remember words. All right, guys, have a good one. I'll see you guys in the next one. Bye.